Welcome back to the Investing Talk podcast, where we try to make sense of all things stocks and investing. Today we're looking at Stellantis, the company behind some pretty big car brands, Jeep, Ram, Chrysler, ticker symbol STLA, and, well, their stock has been kind of all over the place.
Yeah, a real roller coaster ride lately. You've got U.S. tariffs, concerns about how Stellantis is doing financially, and then some new technology that's pretty interesting coming from them.
Let's talk about the stock price for a second. On March 5th, it jumped almost 8% when there was some news that the Trump administration might hold off on those tariffs on stuff coming from Canada, Mexico. But then the very next day, boom, 5% drop.
Right.
S&P downgraded their credit rating.
Yeah.
Worried about the profit margins and the fact that their cash flow is negative. That's a pretty big swing.
It shows you how much the market is reacting to policy changes and the financials of the company. Those tariffs, if they go through, could add like $12,000 to the price of a vehicle. Think about that. That would really hit Stellantis hard, especially Jeep and Ram, because they make so many cars in North America. But the market is also looking at, how healthy is the company and can they handle these problems? I mean, that revenue drop recently and that negative free cash flow, $6 billion, that's a lot of money.
So we've got these tariffs that could really squeeze their profits, and then you've got Stellantis trying to stay ahead with all this innovation.
Right.
Speaking of which, they just came out with this thing called STLA AutoDrive. It's supposed to let you drive hands-free, eyes off, self-driving, basically. Could this be what they need to really turn things around?
It's a big step for them, for sure. It shows that they're serious about keeping up with the times in this crazy car industry. I mean, things are changing so fast. But will it be enough to, deal with all the other stuff they're facing? That's the real question. I mean, you look at a company like Tesla, their market value is huge, even though they're not selling that many more cars.
To figure out where things might be going, let's dig into the technical analysis of STLA. We've got the moving averages, the RSI, the MCD volume trends. I mean, there's a lot to look at here. Where do we even start?
Well, the moving averages are a good place to begin. So the 5-day moving average is right around $13.90 to $14.
Right.
Pretty much where the stock is trading right now. So that tells us things are kind of neutral in the very short term. But then you look at the 20-day and 50-day moving averages, and they're both below the current price. That could be a sign that things are going to go up in the midterm.
But what about that 100-day moving average? That's still hanging out up there.
You got it. It's around $15 to $15.30, much higher than where the stock is now. And that's telling us that over the long term, the stock has been trending down. So you've got these mixed signals. Short term, maybe things are looking up, but long term, not so much.
What about the RSI? Does that give us any clues about the momentum of the stock?
So the 14-day RSI for STLA is sitting right in the middle, between 48 and 54. Nothing too exciting. When the stock jumped up almost 8% on March 5th, the RSI probably went up to like 60 almost into overbought territory. But then when the stock dropped, it went back down to the middle again. So right now, there's really no strong indication that the stock's going to go up or down.
So the technical analysis is basically a mixed bag.
Pretty much.
What about those other indicators you mentioned, like MACD and volume? Did they tell us anything useful?
Well, the MACD is negative, which usually means the stock is going down. But the gap between the MACD line and the signal line is getting smaller. So if we get some good news about Stellantis, that could be a sign that things are about to change direction. And then you look at volume and you see these big spikes when those big news stories came out, about the tariffs and the credit rating.
Makes sense.
People get excited and start buying and selling.
So it seems like all these technical indicators aren't really giving us a clear buy or sell signal for Stellantis right now.
Yeah, you could say that. It's all pretty mixed and there's no clear trend yet. I think the market is waiting for something big to happen, maybe the next earnings report or some real news about those tariffs. That might be what finally pushes the stock one way or the other.
So is Stellantis a good investment, or should people stay away?
Well, that's the big question, isn't it? Some people think that Stellantis could be a good value play. I mean, their market cap has been around $58 billion, and they've got a lot of cash on hand, like over $20 billion. So they might be undervalued, especially if they can, get things back on track.
S&P seems to think that they can turn things around. Their outlook says that Stellantis could get an adjusted EBITDA margin over 8% by 2026. That seems pretty optimistic considering all the stuff we just talked about.
Well, you have to understand why S&P is saying that. They're figuring that Stellantis can use their strong brands, like Jeep and Ram, to get more market share in North America and Europe. And they're also hoping that the company can cut costs and improve their operations to make more profit. If Stellantis can do all that, and if those tariffs don't happen well, then the stock price could go up.
But there are definitely some warning signs too, right? I mean, that negative cash flow is a big problem, and those tariffs could really hurt their profits. And let's not forget about Tesla. They're way ahead in the electric vehicle market.
You're right. Those are some serious risks that investors need to think about. That negative cash flow means that Stellantis is spending more money than they're making, which isn't going to work forever. And the tariffs could make their cars a lot more expensive, which would make it harder to compete. And then there's the whole electric car market, which is changing so fast. Tesla's always coming up with new stuff and pushing the limits. Stellantis needs to show that they can keep up.
So for someone who's thinking about investing in Stellantis, it sounds like it's a tough decision. There's potential, but there's also a lot of risk.
Yeah, that's a good way to put it. If you're someone who likes to take risks, there might be a chance to make some quick money here. The stock price goes up and down a lot, and it reacts to news like those tariffs. So you could buy low and sell high, but it's definitely not for the risk averse.
And if you don't like taking risks, maybe it's better to wait and see what happens.
Yeah, I would say so. You want to see if their earnings improve or if there's some good news about those tariffs?
This has been a really interesting conversation about Stellantis and all the things that could affect their future. Before we go, I want to ask our listeners something. Considering everything we've talked about, what would make you want to invest in Stellantis? What are the things that would make you feel good about their chances? Let us know down in the comments.
And, investing, it's a journey, not just a one-time thing. You got to keep learning and changing and making smart choices based on, your own situation and how much risk you're comfortable with.
That's good advice. We hope this has given you some good information about Stellantis and, this whole crazy car industry. If you like this episode of the Investing Talk podcast, please subscribe, like, and tell your friends. And until next time, stay informed and invest wisely.